Everybody, that right there. No bueno. No bueno. There. Whew. Broke down below the downtrend highs. I'll tell you what. Hey, Ivan, Will, Everett, David, Rob, Darren, Sergio, Frank, Steven, Mark, Don, Arturo, Rex, Svenborn, Ryan, Mad, Cliff, Diane, David, Ted, Rollin. Good to have everybody this morning. I warned about that. I was kind of. Oh man. Had this feeling if we broke down, look at that. That was the warning right there on Friday. Things were about to get messy. Held briefly. Uh-oh. Uh-oh. Found a bottom though. Found a bottom. So what's the big thing to watch out for? Right here. Look, I mean, it's kind of as simple as this. Look right here. See these? That low, that low, that low. That's support. Pretty simple right now on S&P 500. Break that. Guess what? Probably going on down. Probably going on down. Right here, it gets fairly simple. We have two levels of support. We've got this one right there, and we've got this one right here. This one more key. If that breaks right there, we're coming down here. Like that. So there's your first warning, second warning. That's like this is almost confirmation that we're going down here. Right there. Simple as that. I'm going to put an alert right there for myself, right at 6,000. And this is you can see what I wrote. Breaking down on SPX. That's my alert. We're going down. So that's what you got right there. And that's sitting at 59.22, 59.23. Basically, we break the low. And this is not like a just poke below situation. Like we're probably, if we break that, we're probably set up to go down here. Whether it's a poke or, whether we get some kind of reversal. It'd be very rare if we just spiked down there and reversed it and went higher. So it's one of those, this is one of those key technical analysis points at this point. That if we break down below that right there, probably coming down here. Maybe all the way down here. All right. Now, we don't typically bottom on a Friday. That's just, 90, 95% of the time we don't make the lowest low of the week on a Friday. Now, what makes this a little iffy, though, is that these lows over here were a little lower than what we had on Friday. So it's not really the low of a trend. We didn't really bottom out on a trend. We just did a big flush to a higher low. So this may stand as the low, and we may reverse this and go higher. Still kind of bullishly inclined. Now, when we look at this right here, this low, this high, we did a 618 retrace and stopped dead right there on it. That can project us higher. I spent a lot of time staring at charts over the weekend, just trying to make sure I understood what was going on. Look where this puts us. This potential measured bounce, one of the two patterns I watch, projects us right up there to the target. Maybe even a little spicier than, 6,200, 6,250 was where I was expecting. That may shoot us up even higher. But that 6,239 is right in between 6,200 and 6,250. We may stop right there. Interesting, no? Interesting. I find that completely interesting. Anyway. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't trade. You may lose your money. Remember, there's a significant risk of loss in all trading. I'm not just saying that for my own health. I don't know why the bar is stuck. It's so weird. What's going on? Why is the bar stuck at the bottom? Cool. Love it. Anyway. If you need personal financial advice, somebody to tell you what buttons to push, you need to hire and consult a financial advisor. It's not what I'm doing. And we had a large OPEX on Friday, in case you missed it, in case you were like not coming to my show and didn't get the memo. $2.7 trillion of notional. You know, if you take the options and you unwind them to the actual stock position that it would cover, $2.7 trillion worth of market control expired on Friday, and we saw things get a little spicy. Probably because we were, we had gone up so much into that OPEX, and the market took it back down to a reasonable level, so the market makers didn't lose a bunch of money. Yeah, we're just kind of in the middle of the chop. Not really gone anywhere for months and months and months and months. Super frustrating to trade a market like this. If you're new here, you're like, I'm losing my butt out there trying to be directional. And it's not a directional market. The market's been sideways for months. Literally months. We look at the S&P 500. It's been sideways. We topped out back here in December, and we haven't really gone anywhere since the beginning of December. You go look at NASDAQ, and we topped out in July, and we haven't really gone anywhere at all. And we're just in the vicinity of that high from July. Marginally higher. Hadn't really made any progress at all. You're like, why does it feel like the market's not doing anything? It's only up 3% since July on NASDAQ, the biggest, most fun stuff. 3%, 4%. Splitting hairs. It makes it rough. Rough to make money, right? If you're a trader, it's definitely one of those where you can get stuck. You can get trapped. You can get caught. So, I'm not a fan of sideways goose. I just not a fan. I like markets that move. I'm a trend pullback continuation trader. This is not that. Makes it very difficult. Very difficult. You got to be very so the market takes, 85% of stuff with it. And so when the market's just churning, that means you've got to be you got to switch into stock picker mode. You got to pick the best of the best stuff. And you got to be very careful because the market's not floating all the boats. We're just riding down the rapids, and you got to be really careful. You can't just pick garbage. You got to pick high quality, high probability stuff in sectors that seems like it has opportunity to go up. So the OPEX probably just part of the seasonality. Like Goose and I have been tracking this February OPEX for a while. A number of years we've been talking about this, how, funny enough, the OPEX in February typically makes the market go down. Typically, we see the market flush out. It's kind of funny that way. Look at this, right? I mean, this right here. We typically get a big pullback from mid-February right at the beginning of March on NASDAQ. Typically the way it goes. It's just part of the seasonality of the market. What does seasonality mean? It means we tend to do the same thing at the same time of year every year. There's S&P. Same thing. Look at that. Sideways chop. Tend to chop sideways at the beginning of the year. Every year. Takes 20, this is 20-year average right here. Tend to chop it up. What are we getting this year? Chopping it up. Chopping it up. Now I tend to look at ES, which is the S&P 500 futures. They started trading last night at 6 p.m. Already we're up a little bit today. That's what we got here. We're up off the lows. That's where we closed out on Friday. Opened up right there on Sunday at 6 p.m. Yesterday, 6 p.m. Eastern. And we've been rallying a little bit. So this low will be important. Coming across there from Friday, where we kind of close. That was the big flush out going into the close. Market traded, the futures traded for a little bit longer. I guess that was a flush out at 2 p.m. We traded for a little longer, floating along. Closed it out for the weekend right there at 5 p.m. Opened up 6 p.m. Sunday. Things have been a little okay. We've got resistance right here. 6,075. We've got support down here at the bottom. We break support. We go flushing again today. Those bigger levels I was talking about on SPX there and a few minutes ago, that's what comes into play. Down at 59.23. That's what we got to watch. So NASDAQ, same situation. Put your warning down here below these candles right here. We closed at the lows on Friday. It was flushing off right into the close. Getting a little bit of reprieve. We've got resistance up here at 21,009. We've got support down here at 21,650. And that's the parameters. We break up. We start looking up again. We break down. Start looking down again. And this basically kind of made the same 618 retrace. Russell here. Russell 2000. Look at that. Right back down to the lows. One big flush. We should just flush this out right here. Just flush that out. Clean it up. Right now we do have an uptrend of lows going. We may pop that up here. This is the way this is overlappy is very corrective in nature. We might pop up here. If we do that while ES and NQ go make higher highs, probably setting up for a bigger flush in the market. Now this may just flush out now while ES and NQ flush out. It's possible. I don't have like a crystal ball that tells me exactly where we're going. Just have levels to watch that helps us get direction. Now, yes, S&P 500 is still bullish. All right, this is still a bullish setup to go higher. It's very overlapping, but this is still a bullish setup. Until we break down. That held the 618 right there. Held firm. We break out. Easily push us right up into these targets right there. So the level to watch to know we're actually confirming right there where I put that bubble just happens to be on the 618. That's a perfect place for it. Funny enough. So it's like 61.10 roughly. We get above that on the futures, probably coming on up to that 6,200 price target up there. Pretty clear. Pretty clear. All right. Got any questions? Let me know in the chat. And oil. Oh, let's look over here. SMCI. Look at that coming back down. I mentioned that that might be the resistance zone, and we might go back down. Be careful. Anybody chasing that one, please be careful. Why is this thing hung up down here? It's so weird. We pop through all the Cool. I don't know. A little bar is hung up down there. It's my favorite. I love how it overlaps. It's even set to hide. I don't even know. Cool. I don't know. Whatever. Sometimes things just technology, right? All right. Gold. Boy, this thing fired off. I've got an alert that fires off on a 5-minute on these bounces. Look at this. Bounce, 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 bounce. This thing was firing off all night last night. A little crazy. Potentially topping out. Maybe we grind it higher. We're not really breaking out of the range at this point. Did poke a higher high, retraced off of that. We're kind of hitting our head a little bit on gold. There is the opportunity to just go popping off up to 3,000. Opportunity. There's also the opportunity to pull back as this thing kind of grinds higher or grinds sideways, you know. Silver here indicating that we do have a potential flush back down like that, set up on silver. Can gold maintain its high while silver corrects? Anything's possible. Bitcoin got a nice, that was a fake out on Friday. I tell you what, I was encouraged in the morning show. We were green on Bitcoin. I was encouraged. It was looking good. And then, boy, did that turn around when the market started flushing on down. Risk on, risk off, like I was talking about. What does that mean? When the market started going risk off, this thing flushed out big time. I mean, it was like somebody, it's like Men in Black when they, yeah, let's go, let's flush it again. Let's do that every Friday. You know, not. But when you look at it, we just stayed in the range. Now we're pushing down a little bit here. It's one of those things, like you look at the Bitcoin futures, we're up. We look at the Bitcoin spot market, we're down. This, if it's going to stay correlated to the S&P, this is indicating right now, here at the open, we might see a red day on the S&P. It's like 85% of the time during the halving run, Bitcoin stays correlated to S&P. So 85% chance probably that we're going to have a red day on the S&P. Lower low? Possibly. We'll see what happens. See what happens. Ethereum doing a bunch of nothing. Bunch of Ethereum got stolen from Bybit. I'm familiar with what Bybit is. Come over here. CoinMarketCap. Look at exchanges. Bybit's the number 2 exchange in the world. Bigger than Coinbase, smaller than Binance. If you've never heard of Bybit, it's okay. Bybit's the number 2 exchange in the world. Right there. They got like $1.5 billion worth of Ethereum stolen. Allegedly by North Korean hackers. Everybody kind of freaking out. No big deal. Bybit says they've already covered the loss. It was a technicality. It was a creative technicality, but it was just an old-fashioned internet hack. It wasn't exploiting any kind of crypto anything. Like they weren't taking advantage of any special thing in crypto. Just an old-fashioned sucker. You know, sucked in the wrong person, got tricked into doing the wrong thing, and $1.5 billion went poof. That'll happen again. It's not the last one. Every cycle in Bitcoin, we see some sort of big hack come through. All the way back to the beginning, Mt. Gox. Last time, FTX just totally scamming people. This time, Bybit gets hacked. We'll see it again. It's not the last one. You know, it's the biggest one for now, but there'll be bigger ones in the future. It's just the way the crypto market is. We don't hear about all the money that gets stolen. I mean, heck, look at all the money the U.S. government's just peeing away. And that's, you know, same situation. Same situation. You can say it's different. It's not really different. I digress. Look at the top market cap here. Let's actually refresh this to get fresh numbers here today. We've got gold sitting at almost $20 trillion. Apple coming in at 3.7. Nvidia 3.35. Microsoft at 3. Amazon at 2.29. Alphabet at 2.2. And Bitcoin coming in here at 1.89. Silver right on its heels at 1.85. Very interesting. And for anybody that thought SPY was the biggest ETF, actually VTI, much bigger than SPY right there. VU is even bigger than SPY. It's kind of funny, right? Everybody talks about how big SPY is. SPY is all the way down here, number 23. IVV, bigger than SPY. That VU, bigger than SPY. And the Vanguard Total Market ETF, VTI, bigger than SPY. Interesting, right? Anybody ever thought about that? Anyway, so what does it take for these things to double? Like, what does it take for Bitcoin's price to double? It takes almost $2 trillion, $1.89 trillion. What does it take for Apple to double? It's going to take $3.7 trillion. What does it take for gold to go from 2,900 to 6,000? It's going to take $20 trillion added to the market. These are big numbers. When you look at the available market, available money in the world, we go look up at the top here. Dun, 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 dun. Companies worth $116 trillion. Right there. All assets, $154 trillion. So where does $20 trillion come from to double gold? Not sure. Not sure. Where does $3.7 trillion come from to double Apple? It's going to have to flow out of something. Flow out a lot of somethings, probably. So it's just one of those, like, if you're chasing these big tickers up here and you expect them to double or triple or, it's kind of tough when you're up here in the top 10 assets in the world to double. It's tough. Law of big numbers. So just keep it in mind. NKD just chopping sideways. If we break out of the bottom, that's the warning. We may see a bigger flush in global liquidity. Dollar kind of bouncing off the roadmap line so far. Maybe support there. Maybe get a little. There's the chance that this goes and makes a higher high. There's the chance. This pops on up, makes a higher high. If we get above that 618 level, possible. If we turn down there, probably going on down lower. Maybe heading on down to those lower levels I've been talking about for freaking years on the dollar. All right. I go pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list, and we look for opportunities. Like, what can we find opportunities in today? FNGU looks like it might have missed that 720 target. Starting to push a little red. S&P. I don't know. NASDAQ coming back almost flat. S&P's holding on 20 points. 50 points on NASDAQ is basically flat. It's a quarter percentage point. So we can see this one. This is a leveraged ticker right here. We might see that make a lower low and then bounce. Support still all the way down here at 500. Next up, CEG. That's already given it up right there. Target down here at 250. Tesla bouncing a little bit. Looks like it wants to. This may go for a roadmap line touch during market hours. We touched it in the pre-market back here. This may be going for a touch during the actual market hours. So we could see something touch just a little bit lower here. Could come down to 319. It's basically where we touched before, roughly. See what happens there. If we bounce here, it's a higher low. Entirely possible that we bounce here. Push that 76. Bounce. We break out over the high here. It's 364. Probably going cruising on up pretty quickly. FRPT. Fresh pet. Wow. What a retrace. That's a measured bounce. Well, to return to the 618. Let's check this out here. That low, that high. Yeah, for that move to be a measured bounce, it's got a ways to go. Just retesting the 618 support before we push on up, maybe. So this pullback over here, it's not a measured bounce. Don't do it this way. That's not a measured bounce. That is a retest of that support. If it doesn't hold, we're coming down here. And that would be a measured bounce if we hold here for a potential upside. Fine point here. People get a little confused on this. All right, let's go through it. One of the two patterns I'm looking for. So here's the trend, right? This is the trend. This was a pullback. This is the potential continuation. Now, if you were looking at this and you were like, well, where was the measured bounce? I'm hunting for a measured bounce. I don't really like those because they make the big moves. So we have to zoom out and look at this. Here was the low. Here was the high. And that didn't really do a measured bounce. But that's the trend. That was the pullback continuation. So we look for just a regular roadmap bounce. Continuation would be up here at 228. Possibly even 277. Like this. And then we'll get another pullback and then we'll potentially go higher. Now, a lot of people will draw their fib lines here and think that when we pull back and hit that, that's a measured bounce. That's not, right? The measured bounce would be, we went down here, we came up here, hit, and we got continuation. That's the measured bounce. All right, very fine point here. So on this one, the trend is right here, that move. So the pullback would be right here. That would be the measured bounce if we're going to do it and project us even higher than this target, potentially. Potentially sets us up for a bigger move up to 470 area. Possibly even 700, 800 right there. And that's a higher level than that right there, just the continuation. But that's also a further, deeper retrace here before we can do that. Hopefully that cleared up something for somebody. You got to do your fib lines on the right spot, all right? You can't just put them anywhere. Like it doesn't just work that way. You can't just like willy-nilly put them out there. They've got to be, it's a very exact thing when you do technical analysis. So that low, that high, that's the measured bounce level. If we get there, then we might just hold the roadmap. We might just do a roadmap bounce from here. Weekly roadmap bounce right there. We're popped up a little bit. If we do that, 175, 189, 200 right there. So if we pop up, that's the conservative entry. That's the confirmation. We're probably going right up in here. And that's the target based on the bigger picture. This is the target, 175, based on this bounce right here off of that weekly roadmap line. All right, if that helped anybody, let me know in the chat. Look at the daily picture. This chart's nasty on a daily chart. Whew. Looks like we're going to get continuation lower. So I would be very careful chasing fresh pet right now. That looks like we could come down here. SAP is the wrong SAP. We need to get the New York Stock Exchange SAP. And probably top it out. That needs a retrace. It hadn't had one in, gosh, almost 2 years, year and a half. Not much to do. It's just a trend. There's no pullback. I'm trend, pullback, continuation trader. When it's just trend, hey, ride the trend, but way beyond anything I'd be looking for. Oracle has this bounce set up in here, but bounced up here, turned down, wicked. Bounced up again, lower high, turned down. If this breaks down below this roadmap line, we're probably going to flush it right down here. Probably. That's a measured bounce set up to flush down here. First move down, retrace to the 618, continuation lower. MSTR, so if that doesn't go for the roadmap line right now, there's the roadmap line, and if we do equality with the first move down, there's the target. So there's your 2 downside targets right there for MSTR. Bitcoin kind of flushed a little bit. Looks like we're going to get that on MSTR and possibly get the continuation down to that 226 level right there. That's a measured bounce also. First move down, came up, 618, held, continuation right down in there. Boom. Been warning about that potential flush out for a while. Coin finally hitting the target zone. We might push it a little bit lower. Ideally, I want to see this come on down just a little bit lower, maybe to 220. Another $15 down. For those of you deep into crypto, it's going to hurt, especially if you got in up here, chasing it. Has the potential for a big bounce if we can get that final flush out right there. CDNS, cadence design, getting a big flush. Need to hold these lows right here. If we don't, things might turn more sour. And these, MSTR was bouncing, gave it up. And these things were up $2 or more in the pre-market, but they're already giving it up. So things turning sour here after the open. Twilio, looks like we're going down for the roadmap line. Weird, we ride, whatever. Looks like it's coming back down. Be careful. That was, I mentioned last week when this showed up, that was a little bit crazy, and we'll probably do that, even though there's no roadmap line, there's no nothing else. It's just typically, when we do crazy moves, we typically take crazy moves right back. Google coming down for the roadmap test. A little bit lower to go on both the Class C shares and the Class A shares. ZTS. That needs to hold that low, break back by the roadmap line, and get out of here. But this is kind of a big, choppy watermelon seed squeeze thing. Unpredictable pattern. Be very careful. A, B, C, D, E. It might rally back up like this and then break down. Be an A, a B, a C, a D, an E. I don't know. Could break out too. It's unreliable. I don't know if that was the A or if this is the A. It's very difficult. This could be the A, B, C, D, E. That was the one I was looking at. Could be continuation. That could be an A. This could be a B. And this could be the C wave lower. It's very difficult to tell which one it is because of this pattern. It's very challenging. I don't like it. It's unreliable. Could break higher, could break lower. Usually what we see, the mouth of this thing, if we're going to break down, we may go down here. If we're going to break up, we may break up there. That is a very large range. All right, 360 on the upside, 85 on the downside. That's a very, very large range. Be careful. FAS, kind of topping out a little bit. Got a little bit of room to go to a target, 192. Then my bigger picture target off of the bigger pullback back here. We could see this rally way on up to 1,000. This has a giant measured bounce in place. That doesn't mean it won't be without pullbacks. TLN. break it down. Maybe come back to the roadmap line there. NVIDIA bounced off the roadmap line. Continuation will be down. Pulled up, lower high, lower high, lower high, lower high. 2x leverage on NVIDIA. That 2x leverage indicating that we might see NVIDIA drop. You may be like, no way, but NVIDIA has earnings coming up later this week. The leverage chart indicating that we might see a drop. Be very careful. Very careful out there. BRDG, Bridge Investment Group. Nice pop. Holy moly. Holy guacamole. Got that high. We've got that low. Upside target 12 or 13. SPXL. Couldn't get the target yet. 195 upside targets. Looks like we might retrace back to the roadmap line again. Retest. Be careful. HCC, Warrior Met Coal. That's not a good looking chart. We'd be careful. This definitely looks like it wants to roll down a bit further. Maybe back into this zone to find support. VST. Probably gunning for the roadmap line. Well, that turned around. TEM. Looks like that one's coming on down. Roadmap line. AB. Whew. That is a choppy chart right there. That high, that low. Potential to break above that and cruise on up to 42 there. KOLD. And looking like we might have a... This is ultra short natural gas. Like gas might be turning back down. We have a seasonality. Usually we make a low March or April on gas. It could break down right here. That little nominal higher high could be setting us up for the retrace. We'll have to see. There's a seasonality to make a low in March or April. In gas, you can see it right here. The futures just expect it. There's a yearly pattern to it. So right now, being elevated as we get to the end of February indicates that we might see a pullback into March. Now, it doesn't have to do it. We could always do whatever, nothing ever has to do anything. So this one turned down at a measured bounce. If we get the continuation, this may go lower. Be something like, works like this. That's the first move down. Measured bounce. That would be the target right down here. You would expect right in here at the minimum. If it's going to break on down. Now, it doesn't have to. Could just buck this pattern, and that's the first move down, retrace. Copy the first move down with the 3-point tool right there. Might see regional banks flushing a little bit. QTUM. Defiance Quantum Computing ETF. That looks like it wants to come back to the roadmap line. That's kind of the bubble pattern, right? For those of you that have been here, I talk about a bubble pattern. That went exponential. This has been chopping. If and when we break down, might be coming back into the 60 area right there. If you've never seen this before, check this out. Psychology of a market cycle. I call it the bubble pattern because we get this euphoria. Everybody's sucking in. We're all going to be rich. I got to tell everybody I know to get involved in this because we're all going to make tons of money. And then we make the peak and we start shopping. It's okay. we just needed to chill out. Like it's gonna keep going, right? Like we're all gonna be rich. Just needs to chill out just a little bit. But then it breaks down out of here, and that's where people lose big money. You stayed wrong after it proved you wrong, and we lost money. You get angry. Getting out. It sucks. Think about it. If you traded long enough, you've probably seen a few of these. GME, Tilray, SMCI. Maybe Nvidia's in one right now. This chart looks like that might be doing that. Right here. Break down. Easily come back down. Nvidia. Look at that. I mean, it's possible. Chopping around up here. Chopping. Like, look. That's the same Nvidia chart. You know what we did? Did a 67% retrace. Look at this over here. Same Nvidia chart. 56% retrace. Come on back here. Same giant Nvidia chart. Ripping higher. 84% retrace. Same crazy big Nvidia chart. Topped out. 89% retrace. This thing has done massive retraces many times in the past. You're like, well, this time's different. Okay, heard that before. Been trading long enough that there's never this time is different. Always some kind of flush out. Be careful. Could easily retrace 50%. Back in the 60s. Easily. Nike. I saw a bunch of, I guess, there was a train robbery in the Mojave Desert, and somebody stole a bunch of Nikes off the train. Nike getting ready to break out. Watch this gap up here for resistance. If we can break above that roadmap line here, stick it today. Stick the breakout. Come up here, fill the gap. Potentially retrace, hold the roadmap line. Sets it up for a bigger uptrend and the bottom being in place. That tagged exactly where I thought we would. Came up shy here, came back for it. Boom, that could be the low on Nike. I'm not investing in it yet. That was a big measured bounce, basically, right there. SPX breaking that first warning level. Big giant measured bounce right there. First move down, retrace to the 618. Second move down, right there to the target. That could be the bottom, and we go higher from here. Could be heading up to 200, but it might take years. This took years. This took 4 years to get to the bottom. This thing could take 2 or 3 times longer. So we could be taking like 8, 12 years to go on higher. Make a higher high on Nike. It'll be, we'll have swings, we'll have trends, we'll have pullbacks, we'll have continuations. This is a dumpster fire, absolute dumpster fire. Don't trade that. Stay the fudge away. VRT. Why did I say that? This is a reverse split right here on this ticker. This right here, reverse split. You used to have 60 shares, now you got 1. You used to have 600 shares, now you got 10. You used to have 6,000 shares, now you got 100. That's not the way companies that are successful run things. You know, normal split is you have 1 share, now you have 6. Or, you know, something like that. 10 for 1, you have 1 share, now you have 10. That's a normal split. This is a collapse in the number of shares out there. Usually a company does that so they can sell more shares. It might bounce up to the resistance and then probably going down. It's companies that run themselves very poorly are the ones that do this. VRT, breaking lower, watch out. Even if it was on the poppers list, it's now declining. STEC, wow. Stantec. I wonder if this is, that's an investment manager. I was like, there's a Stantec that does landfill stuff, but this is not the same one. Insurance broker, asset management company founded. Yeah. That might go on up to $4, but it's low price stuff. Things that are under $10, stocks under $10 don't always follow the patterns. NVDL, another leveraged NVIDIA chart. This one a little different than the NVDU. Uptrend of lows. We broke down below it right here. We just back tested the bottom of it. Continuation might be suggesting we see low prices on NVIDIA after earnings. Just warning. Coin throwing out alert there. SPX. Ooh. No bueno. Got the lower low. Satisfied the condition. As I said, 95% of the time. Don't typically bottom on a Friday, but there it is. Lower low. Hunting low. If we break down below this low, right back here, Monday, February 3rd, we're cruising on down here. Big market liquidation. All right, decliners. DPZ. Well, guess what? Target was down here. This is a giant corrective setup. First move down, retrace, went a little higher than I thought we should. First move down, retrace, might come down here. It's going to be a little crazy if that works out. So the next move might bring us right down in here. We might bounce again before we get the final flush down here. Somewhere around 274 is probably where we're ultimately heading, but it could be out to next year, possibly even 27 before we finish that up. Could go faster, but could take us a while. PTIR and Goose. I know you were with me on Domino's. It's kind of crazy, right? And I warned about this. We might come back for that roadmap line. Be careful. PTIR is 2x leverage. Think about that a minute. It's 35% down. That could take PTIR with the 2x leverage down 70%. Ooh, baby. 70% would take us back down in here. Ouch. Ouch. Be careful. WDC. That is in a big choppy mess right there. Big choppy mess. Has been unable to break out. Need to take this off log mode. No. Not even sure what's going on here. Oh, Justin? I'm not sure why my chart's not lining up at all, but just remove it and redraw it. Got this downtrend of highs. Got this downtrend of lows. The trend, even though we have big swings, is down. Oil. That's the long natural gas. Ultra long. Natural gas pulling back. This one's going to plummet out. Now, this is a declining asset. Be careful. Big picture. Be careful, be careful, be careful. This did pop above the roadmap line on the daily. That may be it. We have cooked natural gas, if you will. This is one of those where it's got reverse splits. The cost to carry natural gas in a leveraged way eats this up because gas doesn't really trend. We may see this retrace and go lower. BABA hit the targets in the intermediate tier. Probably see a retrace, retest the breakouts above that 120 area before we can get continuation up to 170, possibly 200. TH. Well, that just fell out of bed. Sitting here at the roadmap line, and oh, guess what? Now we're down at 4. Target hospitality does not look very positive right now. Support down here at $2. I wouldn't chase that. PLTR, be careful. We can retrace the roadmap line very easily. 35% down from where we are. PLTU, Be careful. If PLTR goes down 35%, this is leveraged. This could go down 70%. Oops, wrong thing. I have to click this one, 70% down. Oh, that's nasty. Down to 10 bucks. That's a whew. Ouch. Oh, looky. MSTR just hit the roadmap line. Next target, right down here. Getting the flush out. Final flush out. Da, 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 da. GDS probably coming back for the roadmap line. OPEX, 2x leverage, may get a deeper retrace. This one doesn't have to respect the prior high. Use the BABA chart, then apply it to the leverage chart. So we want to see BABA hold that 117 area. If we break back below it, we might be going back for the roadmap line. TH, we already covered. BOBX, we already covered. SMCX, watch for this to flush way on down. That's 3 waves up. Here's your warning on SMCI. Look right here. See this right here? Look at that. Perfect. That was a measured bounce up. And that was to the target. Trend down. Measured bounce. Retrace. Continuation. Down. PDD. Ooh. Turn down at the 618. That's not good. Need to hold that roadmap line. If we don't hold that, probably going lower low. Man. If we can hold, break back above that high, probably going on up to that 175 target. FUTU. Whew. Might be coming back for the roadmap line if we get the bigger flush in the market. WLK coming on down. NBIS. All right, just chopping around under the roadmap line. Nothing looking spicy there. PLTY. Income strategy on PLTR, which I don't know why you would get involved in this. Yield max stuff is pretty gnarly. Watch out. That might get a big flush out if we see a big flush out in PLTR. CWeb. Watch out for that to come down back to the roadmap line. And that's the list for today. All right, I've got something to talk to you about really quickly. Got an opportunity. And let me pop this back up. So on Wednesday, I'm doing an Elliott Wave Hub event right here. Let me paste this. I should have put this link in the description, probably. Wednesday, 2 p.m. I cannot get the right information out of my mouth. Wednesday, 2 p.m. I'm going to do an Elliott Wave thing. Now, starting today, or maybe tomorrow, there's a big set of Elliott Wave speakers. I'm just one of them, one of many. If you're interested in coming to seeing more about Elliott Wave stuff and how to predict, how to do stuff like I've been just doing with the fibs and stuff, here's the link. Go register right there. You can check it out. Other speakers. Lots of my friends are going to be there speaking at that event. Lots of people I've worked with before in other places. People have taught me how to do Elliott Wave stuff. All there speaking. And if you're interested, go check it out. I'll be there on Wednesday at 2 p.m. Otherwise, have a great day, everybody. We'll see you later. My bias for the day is cautious, extreme cautious. We're breaking down. ES turning red. There's the level. We hold it. We can bounce. If we don't, watch out. Watch out. Have a great day. We'll see you.